There's always an opportunity somewhere in the market. Everything doesn't go down together. And so even though we've had a rough year this year, next year actually is setting up very well, more for the fixed income market than the equity market. The equity market still is going to be a struggle, but I think the fixed income market will be doing very well next year as interest rates moderate. We've gone up 400 basis points in yield. That's created the losses that we've seen in the bond market. We don't foresee the bond market or yields going up another 400 basis points next year. So that moderation means that bonds will resume their role in portfolios as an anchor, as an offset to equities. Equities are going to struggle because I don't think everybody has priced in yet a recession. Or the possibility of a recession. When we take a look at earnings estimates, they're only down about 8% from the peak and actually are forecast by the end of year 2023 to be higher than they are today. And so we see that kind of as an anomaly. It's very unusual for that to be the case in a recession. Usually earnings get hit 20 to 30%, not 8.
In the current situation, I believe people should focus long term and not put all their money into the investment world, and to know that investments is not just stocks but also bonds and other diversified strategies. So I believe somebody should start with a small percentage and learn about it first.
Maintain that skepticism. That's a healthy skepticism. Speak with people you trust on opportunities. See what they're putting their own money in, and if they're willing to have you co-invest in opportunities where they have high conviction and you trust them, ask around, see if those opportunities make sense, and be selective, particularly in private markets. You don't want to be too active in the private markets because you're not getting liquidity in those opportunities. In public markets, I would say continue to maintain that skepticism, but if you have opportunities in companies where you have high conviction, you can understand the business, you can explain it to your grandchild, and it's trading at an attractive multiple, that might be an opportunity to get exposure to that company.
I think, me personally, I think right now is a great time to invest. The equity markets are down. It's hard for these guys to gather money right now because of the skepticism. Interest rates are going up. I think you have to take advantage of everybody else's fear. We're taught as kids to buy low and sell high, but nobody really wants to do it, especially on the retail side. They get scared when the market goes down, but it's really the best time, I think, to deploy capital in the right markets with the right partners, and that's where your due diligence comes in.